Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and we are back to our Nadex weekly market analysis. If you hear a little voice, Jen is actually over here today. She did not want to watch her tablet. She wanted to sit with Daddy. So if you guys hear little voices, my little trader is with me assisting today. She's pointing, she's trading, she's doing her thing. So with that said, I can't believe it's March 30th already. It's like I feel like we just started March and we're already at March 30th. So I guess it's been a crazy month for me. I'm sure it has been for other people as well. My kids are going on spring break this week. They're upset that it's only 3 days and not the, as my one son said, no, we get 2 months off for spring break. I was like, what are you talking about? That's summer break. He's like, oh, maybe. So yeah, my kids have not gotten smarter with this whole virtual schooling thing. But anyway, let's dive right into things today. Hopefully you guys are not having that same experience that I had with my little ones. For those of you who don't know me, I've been working with Nadex now for about, I don't know, it's like three and a half years, something like that. I do these presentations and webinars for Nadex because I really feel that everybody out there has, something more they want in their lives. And I feel like Nadex is one of those products out there that is a great kind of added quiver to your trading arsenal. I've created a number of different strategies. I started back in 1999, so I've seen a lot of ups, downs, left, right, sideways, as I like to say. With the tech bubble, housing bubble, now COVID, a lot of different things out there. And I started the traditional way that most people do with stocks and traditional options. I didn't come from like a 12th generation trader. My secrets were not handed down from my father and my father's father and my grandfather's father, those kinds of things. I had to do a lot of the hard way, right? I made a lot of mistakes along the way. And my goal in these presentations is to give you guys something and maybe even help you avoid one of the mistakes that I made. So each and every one of these episodes is what I like to call them every week. I want you guys to get at least one golden nugget out of it, something new, something different, or maybe even just the confidence to try a new way of trading. All right. I've created a number of different courses out there, both for Nadex and for non-Nadex based asset classes. Some of the big ones for Nadex, though, have been the 30-minute trader, the 5-minute binary courses, which is very popular. High volatility trading courses. I do a weekly newsletter with some big levels. I did spend a little bit of time inside of one of the big 3 banks in the advisory division and realized very, very quickly that advisors are not traders. I was like, wait, when are we going to look at charts? I'm like, what are you talking about? We don't do that. Totally floored, right? But I left that industry to go back out and teach people. It's really where my true passion lies. So with that said, my charts will probably look a little bit different. I do not have indicators plastered everywhere. A lot of the tools that people tell you that you have to be successful, I feel just like make your jobs more difficult, make it more confusing. And I like to keep, again, name of the company is Keep Trading Simple. So we like to keep it as basic as possible because at the end of the day, it doesn't matter who you talk to, what industry, what sport, which adventure. If you guys know who Vince Lombardi is, he started every single year off the exact same way, that this gentleman is a football. So again, I believe that that's the way trading should be as well. Before we dive in and before we look at any charts, I do have a quick disclaimer that I have to make sure that we cover. That trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost of another transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. And any trading decisions that you make are solely your responsibility at your own risk. Now, past performance is not necessarily indicative of future results. None of the material presented here is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. And Nadex is subject to U.S. regulatory oversight by the CFTC. Nadex is a registered trademark of the IG Group, for those of you that did not know as well. Pretty soon, I'm going to have to update the slide. I feel like if we blink, I'm going to have to change the copyright on this, the 2022, the way that this year has been flying. It's crazy. So what we'll do today is, this is the standard agenda that we use. We're going to talk about upcoming news events. As you guys know, I absolutely love news trading. I love it not so much just because of it's definitely not the kind of gambling aspect of it. It's more kind of the time management of it that I love. I know exactly when a news release is going to come out. I know that there's a very high chance of volatility. I also know about what the average move looks like, so that's why it's one of my favorite things to do. We'll break it down what it looks like for the rest of the week. Tomorrow's actually a pretty nice day with some big headlines, so we will be looking at those and possible ways we can trade it. Then we'll dive into the indices and look to see if we have any good levels. I did a presentation last night for my students, and we went over some of the larger time frames, and we really kind of broke down where the kind of knockouts and kind of weekly call spreads kind of we're kind of falling in line. So you'll see some of those charts as well. That's kind of analysis that I typically do for myself on Sundays. Saturdays or Sundays you can do it, but I'll kind of give you guys a brief rundown of that. We'll dive over into Forex and see what's moving. The dollar has been the biggest mover today. It has been nothing but a dollar strength story, but I feel like that is at risk for tomorrow. And then last but not least, we will cover commodities. By commodities, I mean gold, oil, and silver. And all three of those are, the last I looked, right before we hit go, pretty much all red. And we mentioned that earlier this morning at the morning session. For those of you that have attended the morning session or didn't know that we have a morning session, every single morning, Todd and I, we jump on YouTube and we go live. If you guys are not following Nadex on YouTube, please go over there, hit the follow and hit the notification button. That way, when we go live, you guys are able to get access to it. It's been really, really fun. We broadcast at this point now from 8:45 to 9 a.m. looking for what we find, or what we believe is the hottest opportunities for the day, and talk about some potential Nadex ways to play it, or I guess ways to play it using Nadex. And a lot of these things just seem like they keep rolling and hitting and things like that. So hopefully it's been a good educational experience for you guys to be able to do this on your own. All right. So let's go ahead and jump over to news. Let me click this. Let me bring this over here. And you guys should be able to see that now. All right. This was the first thing. And again, this is the headline. This is not necessarily news. This affects tomorrow. But I think this is a very, very interesting headline. OPEC Plus panel is revising down the oil demand estimates. You guys remember the last time we talked about this, I mentioned that OPEC Plus is a very interesting organization because, again, they represent oil producers and all the money that can be made with oil. And they used to have more control in the past, but that their estimates always seem pretty high, right? Oh, demand is high, because when we have high demand, we have high prices, which means they make more money. But yet those are the guys that are putting out the estimates. Just didn't quite seem right. And now they're actually revising down the estimates, which I thought was pretty interesting. But as far as what we're looking for, consumer confidence number today was actually much better than expected. In all fairness, again, I am a human being. I can be wrong as well. I didn't actually expect this to be as high as it was. I thought it would be a little bit lower with everything that we've heard, but it did actually surge much higher than expected. Now, what does that mean for the markets? At the end of the day, not so much. It was expected to be higher. They also revised it down last time, saying that the consumer was not as confident. So it is technically a mixed news release. But really, that's it. I mean, combined with other headlines, there's really not a whole lot out there. So it is overall great that the consumer is more confident. We can, potentially see, better earnings, better sales numbers. So retail sales would be the kind of the next one we want to look at to see how that is combined. The rest of the day, really not a whole lot there. We have manufacturing for China tonight, and that can be an important number if you're up at night. It is expected to go a little bit farther above 50. If it drops again, there can be some market movement. But again, this is Chinese recovery, and again, this is a purchasing managers index, so you got to take it with a grain of salt. Tomorrow is kind of the big day. Tomorrow morning, we start off with final GDP quarter over quarter. Now, this is one that doesn't tend to miss too much, but we've had so much dollar strength today, really across the board, and the pound has been rather flat. So if we're going to have a retrace and the dollar starts to weaken, there are going to have to be some counter currencies out there that provide some kind of opposing strength. The pound is one of them, okay? Not that I expect this number to be a miss, but again, it could provide something. So again, a way to look at that would be late night looking at this one at the European Open. 8:15 tomorrow. Excuse me. I love spring. I can turn all the air conditioning, the heating, everything off. Man, do the allergies start to get me after a couple of days of the doors open. Tomorrow morning, 8:15 Eastern, we have ADP non-farm employment change. Now, this is not the big non-farm payroll number, but this one definitely provides some volatility. And the last 2 days, we've really had no major news releases. This is the first one, and this is a very big number. It's supposed to be an increase of 552,000 jobs. Last time it was 117, so this is a big push up. If you remember back, we're talking about what recovery is going to look like. It's going to take a year, 2 years, 3 years. We may never recover. I mean, there's always been very, very negative type, views on it. And now we're already, people are already starting to say we're recovering, we're in the lead, we're going faster than expected. We're a month into a new presidency, so it's kind of hard to say where all this is coming from. But, again, 552,000 is a big number. Now, 8:15, we have GDP for the CAD month over month. Now, Dollar CAD today is up a little bit. You guys can see it here. It's about 38. The dollar has really been kind of running away on this pair. This is an interesting number because, again, if our Canadian neighbor, our northern neighbors in Canada have a better GDP number than expected, that could also provide a counterplay to dollar strength like we've seen, right? I just mentioned we're looking for, for lack of a better word, looking for a hero to come in, right? Well, it could be the Canadian number, okay? So we could see a dollar CAD that's red tomorrow because of better than expected Canadian data. If it's negative, again, then it kind of goes back into the dollars play. But if it is a positive number, again, that's good data for the CAD. We could see the dollar CAD drop. At 10 o'clock, we have pending home sales. Doesn't necessarily affect the overall market as much. It is supposed to be down, but again, home sales is one of those things. With interest rates starting to kind of creep up a little bit, you tend to see pending home sales go down as well. So that's pretty normal, right? Then we have crude oil at 10:30, and again, OPEC is already talking today. They're like, oh, we got to get a piece of this, right? And right now, tomorrow, there's a forecast of minus 1.3 million barrels, right? Now, there was a little bit of not manipulation in this one because I don't think anybody purposely crashed the ship in the Suez Canal, but that should have affected them. Again, a lot of oil goes through there. That probably should have affected inventories a little bit. We'd see that number in this week, the numbers this week. So we'll see. It could be an interesting number. I think it'll be a miss. I want to kind of look at it a little bit more and see if the Europeans kind of start running away with this one. The last, I don't know, 4 or 5 months, a lot of the movement in oil has happened in the European session. Kind of a pre-move on the actual oil inventory report. So, we'll see. I think that'll be interesting. We'll break that down a little bit when we look at it. And then tomorrow night, Australian retail sales month over month expected to be negative again. So this is one I'm actually very looking forward to. Again, for those of you that know, again, I love news. Australian news at 8:30 at night is also one of those ones that is kind of like my favorite ideal. Like everybody asks me, like, what's your favorite time to trade? I mean, I obviously like the morning because there's a lot of news happening. The European Open is obviously great because that's where the day really starts. But I will say, and it's funny, my traders out there know this, and it's funny, they call it the root trade now. A lot of them are really getting into these nighttime trades because, again, without the overall kind of banks and institutions in there trying to counterplay everything, you can get a lot of decent moves in that nighttime session. And again, the strike widths are rather small because it's outside of normal hours. There's some really great setups. And again, I've been preaching this for a while. If you guys are not checking out these nighttime releases, shame on you. I mean, there's a lot of high quality setups that come out of that time frame. Hold on, Ginger, you're stuck. Don't go anywhere. Yes, I see. Yes, it's Batman. All right, and then going into Friday. Friday, we had those OPEC meetings. So they're already making statements. They're going in on Friday. They're going to have to start adjusting. They're going to have to start, again, oil has been extremely volatile this week, and we haven't had the meetings yet. So, again, that's a number you got to watch out for. There'll be headlines on that one. And what they're going to do is talk about increasing production or, kind of keeping the production cuts where they are. So, again, if you're not trading oil, this is one of those weeks where you have a lot of opportunity to get in there and trade oil. And if you've never traded oil before, again, my recommendation is to jump over to the demo side, try to do it, see how well you do with it, make sure you're comfortable with it. Because again, there's nothing worse in trading than losing money because you didn't know something, right? I mean, you can always learn more, but be comfortable with your entries, be comfortable with your strategies, and then take it live, right? Protection of capital is what matters. Then we have ISM manufacturing. Again, ISM manufacturing is one of kind of the bigger numbers out there. So, again, that is an important one we want to kind of look out for. It is expected to be higher, right? It's nowhere close to 50, but the higher it gets, the better off we are. And again, this is going back into that manufacturing. So if you've been riding the Dow, ISM manufacturing is a great news release forecasted with good information to end out a Friday with a new high in the Dow, okay? Couple that with a feel-good Friday like we had last week. Yeah, nice little trade setup on that one. Again, I really like the ISMs when they're on Fridays like this. So again, positive, could be good. Get beat up a little bit this week. OPEC says something that's decent in there as well, talking about how world recovery is better. All these things could lead us higher. Again, so I'm already kind of looking out at that one. And that's kind of it for the week. I mean, then we roll into, there's Thursday. Here's Friday. And again, first Friday of the month is your non-farm employment change. These are the standards that we have first Friday every time. Average earnings not as important, but these are the two big ones. Unemployment is supposed to drop back down to 6, 652,000 jobs. Again, there's your standard releases. It is what it is. We have to deal with those every week, and they're considered, non-farm is considered the top, if not the second top biggest mover. But remember, some of the thunder is stolen away from Wednesday. All right. That's the week at a glance, right? I don't think there's anything this week. Saturday, nah. Saturday, Sunday, nothing, and even Monday, there's not going to be a whole lot there. Monday, there's a little bit something early morning at 10, but for the most part, that's what we got for the week, right? All right, so let's dive over. Let's look at. We'll start off with the indices. So here's where we are on the ES. Let's see, make sure everybody can see it. All right, so S&P right now is down. There's a lot of red on the board today. Right now, it's down. I think what, 0.33. So a third of a percent, nothing too crazy. And you can see, really, since the opening happened, I mean, since about 6 o'clock this morning, we've been stuck in the same area. We did have a little area that we had mentioned before, and this was kind of a 10 o'clock reversal yesterday. And you can see it was the same thing. If I extend this level across, right there, you can see here's 10 o'clock. There's 10 o'clock. Now, has it left and has it gone crazy? Nah, not really. I wouldn't say that too much is going on in there. It's a little bit negative, but really what news can drive it today? We have Biden speaking about infrastructure and more spending, and we're not really seeing inflation, and the dollar's strengthening. Rates are going up a little bit, which again, rates start going up a little bit. People start thinking inflation. That means raising interest rates, which is also bad for indices. So a lot of kind of seesawing back today from what we've heard. So as I said, the way that I typically like to look at these is look at them on the 15-minute. And you can see here, this is the 15-minute chart. You can see it's pink. We're in the upper third of the curve. So we're thinking right now negative, right, more than anything else. We do have a knockout bracket sitting up here at 39.82. We haven't really gotten close. There's a minor level sitting there, and that's what I have drawn for the extreme range of the curve up here at 39.72 to 39.79. Knockout kind of just nestled behind it on the other side. We haven't really been able to get back to it. And you can see on the 15, we had this one little pop at 10:30 down. It's like, woohoo, grab that reversal and back up, but it's not really trending. I would say now this is really kind of the second level of hit that we've had at this level. It's an okay level. I mean, it kind of turned in the middle of the nowhere. It was a decent base. It dropped, went 3-4 candles, and then popped, and then kind of tested here. So, at this point, would you continue taking things long off of it? Maybe for like a minor reversal, something like that. But I really think at this point, we really got to start looking out for when is this zone going to break. As you guys know, the rule is typically, between 3 and 4 is where my daughter's pointing at this one. It's like, where's it going to break? And she points at it. Between 3 and 4, it tends to be where it breaks. If you wanted to kind of put some symbols on it just for, visualization. I mean, this was a close one right there, right? You could say that, hey, listen, this is definitely a hit. This is definitely a hit. So whether you're counting this one or not, either way, it's either number 4 or number 3. So we're kind of getting up to that stage where we got to be thinking, if that area doesn't hold, is there a reversal? Is there a short? And the answer is, I'd say, yeah, there's probably a decent short, because looking over here, looking over here on the left, you can see that there's not a lot really holding this back. I mean, price came down, tagged at 39.06, and then launched itself. So, you got to be thinking, she's pointing at the charts again. This area here could be an interesting area. And again, you play this like a Harry Potter. We're looking for a breakthrough, kind of a little bit of basing, a little bit of pausing, a pullback, grab that level, give you your established level of risk, and then look for a push down back into the, the 39.06 range. And again, that's it's another area where we've seen buyers step in. Is it the freshest? No, but as far as the take profit goes, it's a great area for us to target down here at 39.06. And again, just so we can see, I'll put this here so you guys can see. This is a break of at the approximate level of 39.29, right? So a break below, base, pull back up, grab the 39.29, take it short down to the 39.06. And again, if we get back up top, just so you guys can see where the levels are. The beginning of that area starts at 39.72, and there is a knockout right above. So if we get any type of formation that kind of comes up in here pretty deep, once you get to an acceptable level of risk, you could, again, take something like that, based off of a kind of a pushback down. Just be cautious with this level up top. Again, if you can get small risk, you'd probably be okay. But again, with 2 big payroll numbers this week, you got to be a little bit careful about those numbers up top. I think a continuation of the current trend to the downside is probably a little bit better, right? All right, looking at NQ. So NQ, we had a level just a little bit of low. Now, we were sitting here yesterday morning, if you attended the session, and again, we had that same little level, and again, 10 o'clock reversal, drove us up, grabbed that top level, rolled us right back down to about the 50% mark, closed up at the high, and we came all the way back down and touched it again. So again, these two levels at 29,962 and 12,807 have been two levels that have been holding pretty firm. Now, as you can see, this one got a lot sloppier, and we mentioned, hey, listen, if we can get a break, a clean break, right? Something that drops bases and pulls back, all this did was start to go and push. I'll move this to the side. You can see that it started basing here. So you're like, it looks like we could finally break. And it did. It shot down at 10 o'clock and came right back up again. So it is pretty much primed kind of the same way. So I would look at this and say, hey, listen, we're looking to kind of overtake probably somewhere in this area, looking to push down to the 12,705 or 12,704. And again, we need kind of the pattern. It's an if this, then that trade. So, just like we've seen in the past, we're looking for kind of a breakdown in the trade, right? Somewhere pushing in, and it's probably going to be here at 12,776. This will be a support and resistance trap, most likely. And then, what it'll do is it'll pull back and we'll have a hard time breaking through, maybe base a little bit. And then we're looking for a push from here back down into this, 12,704 level, right? Remember, it's if this, then that. Could it drop all the way down with a big payroll number? Sure, it could, right? But what we're trying to do with this little pattern here, this Harry Potter, we're looking for this to get somewhat of a confirmation, right? You typically don't want to get into something after a big movement in price. You want to wait for pullbacks. This is a breakthrough of an area of old buyers. It should become old sellers. When it stabilizes, it says, okay, I need some help. So when it goes back up again, that's where it grabs, and then you're looking for the power, right? That's what gives you an established level of risk, right? If you guys are curious. But that's what I would say is kind of in line for this. In YM, YM has really kind of rolled back over. Now, we knew we were at the extreme range of the curve. There was a small entry right here, right? The way that candle formed, that should be actually red, my bad. And that's looking at what? It triggered at about 6 o'clock this morning. Is it the cleanest? Nah, but it was a decent top. It's an area that we're looking for. It's a failure to go higher. Since that time, again, chopping back and forth. This one didn't have that little clean area, right? We knew there was something sitting there. I would say for this one right now, I mean, obviously much, much lower, but we know we got a level sitting right in here. It's a level that's been hit a lot, but it's not as clean. Could it be a bounce area? It could be, right? I mean, it's sitting, what, about 120 points lower than where we are. I mean, if we end the day here, could this be somewhat of a rally point? Yeah, it could be. I mean, what I would say is if we can kind of come down to here, right? Is it a level that we're willing to take for something long? The answer is it depends when, right? As you can see, we've hit here a few times. That tends to be a little bit riskier, right? But, and I say but, if we come down and stabilize, it has not broken yet, okay? If we can get down here in time for a Biden speech, I imagine it's going to be all sunshine, peaches, and roses, okay? I think it's going to talk about how far recovery has come, how much better recovery is going to be, and all the great, amazing things we're going to do. Because again, that's typically what political speeches talk about. But that could absolutely drive us up back in this direction. Now, it looks similar to the last one too, and you may say, well, wait a second, what if we come down here and break? You could do that, and again, there is candles, and again, we've seen buyers kind of step in at lower levels here. Actually, let me change this one to more of a blue. Right. There is a smaller level. I mean, there's a couple levels down here, probably in this level. I would say either of these two levels would be potential areas where we could pull buys from. And let me change this to blue. Right. Again, I'm pulling these from the old level that we broke through. Pull this one across here. I think either of these levels are probably, again, the timing matters a lot on either of those two. All right. We can remove these. Let's see, pull those both. This was that Harry Potter trade from last week that we talked about. Those are out now. All right, so I mean, my personal opinion is I do think that the Dow has the ability to close higher again this week, whether it be a feel-good Friday, whether it be some of the employment numbers. Remember, employment is going to go more to the masses, which is the Dow. So I think this one has some potential. And again, this could be a Biden speech. This could be a European Open. This could be the ADP numbers tomorrow. And again, a lot of this is timing. 12:30 in the afternoon, not necessarily the best time because this should kind of push down. Question is this where we close? Is this where we stabilize? And then do we get our speech and punches higher? So I don't think there's going to be much more activity in it today. I would say it looks like it wants to continue to go down. Wait to see what the Nadex contracts look like tonight. If there's a cheap call spread or maybe even some of the binaries in there, I do expect there to be a bunch more movement tomorrow than versus what we had today. Okay. Again, just for the fact that let's see, tomorrow right here, just because of this, right? Just because of that, right? So that's what we got for YM. Let's switch it across. I'm actually going to stay with this platform right now, just because it's easy and I feel like you guys can see this really well. It does not have the indicator with the zones, so these are more or less just hand-drawn zones, if you guys are wondering. That's what all the other zones were on the other one, the indicator that my students used. But starting off with the Aussie, you can see that the Aussie is kind of pushed lower. Now, I'm going to go back up so you guys can kind of get a read on this one. Here's the 4-hour chart, right? We have a decent tested level up here at 76.79 and 76.90. There is a knockout bracket sitting right at the very, very beginning of that area. And that's kind of why I had this kind of dot here, this little note just to let me know. Downside wise, this one, it doesn't have a whole lot of clean down there, but we can see, oh, I don't want 45, I wanted 4-hour, my bad. You can see that this was an area where we had price being turned around. And again, this is a lot of movement in 16 hours to the downside. It's all dollar strength. We are going to get some, again, there has to be somewhat of a reversal in the dollar. It's very, very fast. Now, I mean, you could say, hey, listen, this continued. Yeah, it could, but it didn't have a really great level like this. So I do think in the Aussie, there's some positions that we need to watch out for, particularly if we can continue to push down. And if we can end really down in this level down here tonight, this could be an interesting reversal level for tomorrow morning from the European Open. The way I would also play it, and again, we'll talk tomorrow morning as well, I would like to see, actually, we won't get to talk before, we won't get to talk tomorrow before this one. So here's how I'd play this non-farm. I think this non-farm employment change number is a pretty decent one to play on this one. I would also look to see on, say, a 30-minute or an hourly, either one of them works, right? 30 minutes is fine. If we can close down in this level, right, it may be worth looking to see how much premium is packed into, say, an Aussie dollar call spread. If we can get something with minor risk, and I say call spread, not knockout, and here's why. If we're looking for a call spread, we know buyers have stepped in, but when in a low volatility, low volume based time, what happens if the price drops down to this level, right? And we start getting our basing here, because again, this is going to be a bit of a support and resistance trap. This is an easy one to see. If it's a call, if it's a knockout and we go below the floor, you're out. You're done. We don't have any opportunity. If it's a call spread and it goes below, no harm, no foul. It does not automatically take you out. And tomorrow does have the potential for a big move. So as long as there's not a whole lot of premium jacked into this one, it may be something that is on the rather cheap side, depending on where the strikes print at, for something to go higher. And again, all it is would be looking for a reversal of fortune. Again, this has been one day of nothing but down. We tend to get reversals at larger levels. And again, we do have a larger level coming up in the Aussie. So it's kind of what the thinking is here. I was really hoping we'd come all the way up here and then get it this day, but unfortunately it was not in the cards. It started the turn before we got up to that knockout. That would have been a great knockout because it had some legs today. This one, we had a level up here. You can see on the hourly, we had a tested level, a little bit of basing. It dropped. It gave us that space, came up, dropped. Real strong push, and we were like, oh man, just get up there, get up to 84.36, and it didn't. We missed this one by 8 pips, and then it drove all the way back down again. And it happens. There's nothing you can do about that one. And again, sometimes, we have the analysis right, but we miss our entries. That's one of the downfalls with some of the other asset classes. That if you were waiting, you had a limit order in there, you didn't get in. It happens. You move on. I would say right now, keep that on your radar, depending on where we are at the European Open, or for this news tomorrow night, the Aussie retail sales at 8:30 p.m. That is also a level that, again, if we kind of meander around here and kind of come back up again, if we're over here tomorrow night, which would be, you can see it down here at the bottom, it would be right here, right? This is an hourly. This is another reason why I wanted to kind of move this over. Do you guys see all the news releases down here at the bottom? It's telling us when the news releases are. If we are here tomorrow night at news time, and we have Aussie news that is expected to be negative, if this comes in at negative 1.5, more negative than what they thought it was going to be. Guess what the Aussie yen is going to do? The Aussie yen will turn and roll back down. So again, something kind of a setup for maybe tomorrow. Aussie yen obviously will move a bit in the morning as well with the US number. But again, this could be a trade setup for tomorrow night. I probably wouldn't cover this one in the morning session. So again, just keep it on your radar, right? And I think that's a decent level. As far as where it could drop to, I mean, this is the hourly. I would say watch out for this little zone right there, right? We'll change that to yellow. And then besides that, there's a level much farther down south. I don't think we'll necessarily get that low. It may be something to watch later, but that would be a drop of, drop of about 140 pips, right? That's a lot, right? I don't know that we're going to get a 140 pip drop in 24 hours in the Aussie yen. That would require just absolutely just unreal movement in the yen. Okay, that wouldn't be an Aussie based move. All right, so let's go to Europound. So Europound right now, you guys can see that this one has moved 0 pips in 24 hours. So you may say, oof, is there any opportunity? Why are we looking at this one? Well, it's moved, right? It's moved. I mean, it had a peak to travel about 34 pips. It went back to a very identifiable level right here. And you can see it dropped. And the drop on this one was about 18, right? I would say right now this one is kind of stuck, right? We're not hearing the best of news out of Europe. We're not hearing the best of news out of the pound. Neither of them is really great. This one, 4-hour wise, where is it? You can say it's on the kind of the lower end of the spectrum. There's actually a knockout here. I was hoping that this one would go up, and it really didn't do much, right? So yesterday afternoon, I said, hey, listen, I like the 86.26. I like the 84.43. There is a knockout that actually covers that range pretty well, right? That's what this blue box is over here on the right-hand side. But unfortunately, it's kind of stuck, right? And we talk about this, right? No man's land. If I was to use, again, on a larger time, right now you can see we're in the bottom third. But if I went from this level to this level, right, you can see where are we? We had a fast movement back down again, pretty decent movement up, pretty movement back down again. And now since we got back in the middle, we have stalled, right? We've stalled, okay? So on a daily view, right? On a daily, you can see, hey, we're definitely very, very low on the curve. But as far as on the 4-hour, kind of a smaller intraday level, we're just kind of skirting down the middle. So I think it's a great knockout. It's in the right area, but unfortunately, we need a little bit more news. This one is not really a week packed full of news for the euro or the pound. So maybe we get it later in the week, but again, being a shortened holiday week, I don't know. Maybe it's something we look forward towards next week. And I know that's a couple days away, but again, spring break, Easter, a lot of stuff can happen. Okay. Looking at euro yen. So euro yen had an area that we were looking for up top here. We were looking for kind of a hit, and this one, I'll drop it down to an hourly. Again, this one kind of went up and really started basing in this level. It's one of those ones, it was like, be cautious of the level, but it was really pushed to the brink, and you can see it pushed to the brink again. I would say the level up here at 129.89 is a better level to be able to take short. And again, the way that this based here, I would not be willing to take shorts out of this again. I mean, once it hit here again, you're like, yeah, it pushed it to the brink. Wouldn't be surprised. And again, it hit it again, pushed all the way to the brink, and then rolled. Excuse me. At this point, if anything else, I'd be looking for, I mean, if it breaks the top side, could we have a push up to that next level? Yeah, I would say it's possible. Whoops, I don't want to move that one. This is what I was trying to move. So, I mean, maybe there's a break of 129, but I'd say right now, I mean, the way that it looks like it's forming a pretty decent push back to the downside. We know we have European weakness. It's not like the yen is, blowing anything out. There's a few levels here. I would say the next decent level to go long would be much, much lower. So unfortunately for today, there's not much in this one. I would say the next big level that I look at for reversal will be 129.89. I mean, the next big kind of buying area would be down here. And I do like this one a lot. I will change this one to a green because I do like that level. That would be 127.53. On a larger time frame, it's been tested once. It led a big rally. It is in the bottom third of where the curve is. This level scares me a little bit because it's already had 2 hits and it kind of was a slower push out of him either time. I like this one a little bit better in my eyes. So 129.89, and actually I guess there is this one up here too. We'll mark that one off and we'll turn this one red. 130.50. So 130.50, 127.53, or you could just change it to 127.50 if you wanted. Are two of kind of our top and bottom kind of real good ones. I think 129.89 is also one that is not a bad trade. And again, timing for this matters, right? Timing for this one matters just as much as some of the other ones we've talked about. Looking at euro dollar. So euro dollar has continued to push. So yesterday with my group, I mentioned, hey, listen, I know we're at the extreme ranges. We should be looking for a place to buy, but I just didn't have anything last night when I was looking. I was sitting right here at like the 6 o'clock window, and I said, listen, the way that has hit this zone, I'd be looking for a collapse, right? It's hit it 3 times already. It's basing in it now. If we go through, take it short, and that's the way. That's the play that we had. Did I know we'd get a day worth of dollar strength? No, but just based off of technicals, the way that we've really kind of smacked this level multiple times, we were looking for a short. You can see it blew right through its 1 to 3. In fact, this one actually made it to 1 to 10. So huge mover off of that one, right? Question is, where do we go with it now? What can we do with it now? Looking at this one on a 4-hour basis, you can see it's been pretty much straight down. You can see that it hit this level here and kind of chunked through it, pulled back up and kind of grabbed it twice. The question is, let's see, let's go to a daily, see if there's a decent level below. And this is what we're dealing with. Not much, right? We know that there's a spike all the way down to 160, or what is it? 116. Kind of a hard level to start kind of projecting to, right? Let's see. Even there. You can see that there's another small zone in here. There's a big wick there too. I'm going to have to go down to my little hidden levels here. Let's see. It's probably more like there. Problem with this one though is we have this big push to the downside. So finding the bottom of this euro is probably going to be a little bit difficult. I can see right here, look. That's what we bounced off of. Let's see, how big is this area? It's only about 13, so I would probably look to do this as well. And again, this one is also kind of a timing play. Right there. Okay. Kind of a timing play. If we can come down and base in this level, right, do one of these drops, and then we start to see that basing in there, then I'd look for a break. Look for a break of 116.98, really the 117 number. And again, that will be a psychological number too on that break, so don't be surprised if it does chop back and forth. I'd look for this one to push down, probably at least down to the 116.55-ish, maybe the 116.50. This would be dollar strength. Biden speaking kind of messes that up a little bit because he's going to be talking about spending a whole lot of money. But we've just had so much pressure in this one. Like I said, I don't think the European situation is that good right now. And we keep hearing additional kind of news releases about, it's not great. Now, look, Germany is recommending AstraZeneca vaccine for only the 70 or the 60 plus people. So they're having some issues with the rollout over there. So I feel like this has some more room to run. Right. I don't know, maybe I'm overly bearish on the euro right now, but I just feel like this one has the ability to get down there. It is a lot. There will be a retracement, but again, if this, then that. If we get this break, right, if we get basing in this level, again, look for a push below, look for a push back up, and then you have your established level of risk, and look for this one to drop back to that side. Okay. Now, I don't know how long the base is going to say or how it's going to move, but there is a bunch of news tomorrow morning, 2 different times for this one to kind of move. Pound yen. There we go. All right, so this is the levels that we had for pound yen. We had a small level up here, and you can see we kind of hit it. I'll drop it down to an hourly. You can see the candle's a little bit better. It came back up, right? We were looking for kind of a test over here, and it hit it. It pushed down today. We've been looking for shorts. The 2 shorts that I had in this one were 151.74 and 152.40. I actually think this may have been one of the early ones. Let me see. 1 second. I think this was this a call spread that I had on this? Hold on, I'm pulling this one up real quick, guys. Bear with me 1 second. 151.74. I can't see it on there right now. Was it a weekly? No, I had it somewhere. I had this one marked off, and I thought this was one. I started actually putting the things on there later, but I can't find it right now. 268. There's a knockout up here. can get here tomorrow. 152.68. Right there. Okay, there's a knockout sitting there. So there's one kind of prime, but we're kind of far now. But anyway, what I would say is I wouldn't necessarily be surprised if this one pushes down. We do have a knockout down here at 150.18 that I was like, if we can get decent movement. It didn't continue its collapse. It kind of held a little bit. But I would say right now, we're at a label of an area of stabilization. If we continue to base and push down, I think two target levels on shorts are 150.69, and then obviously we have the knockout down here at 150.17. Right now, with this market close, this one is not going to be a huge mover. It's probably going to slow and stabilize. We can expect to see this one probably. I mean, this move from here to here is the European session until 10 a.m. Kind of seeing if we can make. I almost want to say, listen, if we can't move the rest of the day and we can open the European session here, could it be worth a long? Just with the move we had today, I mean, again, you can see big move down, big move up, big move down. We could have a move right back into that 51.74. Let's see, 3 a.m. is going to be here. It's kind of like if we can be here, could we see that? And the answer is probably with the morning that we're having. I just don't know if we're going to hold the rest of today. But like I said, European market is closed. We'll get a little bit of yen play today, although I don't think it's moving much. But if we can stabilize and maybe go a little bit lower, have it prep, have it prep itself, look for a punch back up again tomorrow. It's just basically just a counterplay to today, right? As a counterplay today. This one didn't break, but if we do get a break, I am looking for something short here too. So I'm going to leave that one there. Move this actually over here. All right there. All right. So yeah, that's what we got going on. Pound dollar. So pound dollar, here are the levels that we had marked off. We're sitting here right now. This is the 1 hour. Yesterday we were sitting, I met with my students, we were right here. So kind of the same thing that we saw in, was it Aussie? It's been a level that we had touch here, we had a touch here, we had a touch here, we had a touch here. Actually here, I guess this is where the original level did, but as you guys can see, many touches, right? So we were really kind of looking for somewhere for this to break. It ended up going down to tag the 137.08, right? It's a level where buyers had stepped in, it came up, it pushed high, came back and tested, and you can see it took a roll off of that one. So that would be the trade for the morning. I wouldn't say jumping this when short is really beneficial right now, but this green candle where my cursor is right now is the 3 o'clock. We grabbed a small level, and again, nothing but dollar strength on the way down. I would say it's dollar strength, not pound weakness. But again, looking for a retracement, this kind of has that same thing. This one will continue to move. This one will be affected by a Biden speech a little bit more than the pound yen would be. So just be cautious of this one. But I do think this is a level that, again, if we get a bounce off of it, I would not be surprised. It's been tested in the past. It kind of halted it again. So we know there are buyers sitting in this zone right here. There is a, what is this, a knockout up top? Yeah, we had a knockout up top, but there wasn't really one that I was willing to grab on the bottom. It didn't, none of the numbers really matched up. I was really waiting for it to go just a bit higher, and we didn't get that, unfortunately. But it's worth keeping on the radar for the rest of the week, right? So right now, 137.08 for European Open is decent. Targets at the top side, again, I think 138.37, 138.53 is both good. Could this move? Let's see, how much of a move is it? It's only 113 pips to the top side. The news we have tomorrow morning can absolutely cover that distance, right? You can get 100 pips worth of movement on a payroll day. So again, just realize that this is one of those ones that volatility could definitely be stepping in, and we could definitely have some movement tomorrow morning. So between now and then, there could be something small here in the overnight. Now, dollar CAD, as I mentioned, is one of the ones that we're looking at. Dollar CAD, we're looking at tomorrow, the GDP number, and it's expected to be 0.5. Okay, it's a month-over-month number, so they don't miss too often. But you can see here that they were right last time. They're not right typically often, and not twice in a row. So I'm kind of expecting a miss. With that being said, where we are now, we just bounced off of a level. We had a level at 126.38 to 136.45, or 47, sorry, 47.5. It was a level. We had a very, very strong rally up to that level. And the thinking was if we could kind of get some type of a retracement off of it. Now, it did push us to the very, very brink. I'm very curious to see where we are tomorrow morning. I'm going to drop it down to a 30-minute level and kind of see, hey, listen, Did we put it in anything overnight, right? We know we got a small little level right here, and it's kind of stabilized itself. We know we have buyers that stepped in to kind of push this down, right? Right here, right? So buyers stepped in there. Question is, where are we for that GDP news? Okay. It's expected to be positive. If it is more positive than expected, which I'm kind of leaning towards it might be, that would be a Canadian strength type move and lead us to shoot to the downside. Now, whether it goes off a level here, maybe it rallies up overnight and we go off this 126.66. I think either of those two are decent levels. The only one I'd watch out for is this little hiccup, but I wouldn't be surprised if this one comes down. Any type of short in this position, though, I'd make sure I'm getting my profit before we get to this level right here. Okay, at 125.89. Reason why is, although it based here a lot and it absolutely has the potential to break through, it was so much of a movement. The worst thing you could do is try to ride this down and assuming it's going to go lower for it to kind of take one more little bounce off of this and then kind of hurt you on a binary or something like that. So just be cautious with it. But right now, I would say I'd be looking for 126.66 tomorrow morning would be an entry that I'm good for. Okay. We do have one question. What's the question? Oh, you guys already got it. Okay, good. All right, so dollar Swiss. Okay. Dollar Swiss is quite high. Now, it's not at a level where I'm ready to just say, yep, start shorting. I think 94.57 to 94.69, it's a decent sized level. It's actually done from one of the higher time frames. I believe it's up on a 4 hour. I may have actually done this one on a 2 hour. We've been having a decent push, okay? It's one of those things that it's not quite where I need it to be, right? And you can see on a 4 hour, there's not really a whole lot. So it's one of those ones that I wish I had a better setup. I just haven't. There's just not really clean entries. I think this is an interesting area to watch over here at 139. Well, I'm sorry, not 139. 93.94, right? That's really the only push we had. And that happened at 1:30 in the morning. And then once we got till about 4 o'clock, it just kind of flatlined on us. We had a little bit of a pop and we've literally pulled back in the US session. So, rather small move. I mean, we're talking about, 22 pips. If we take the entire day, we're talking about 45, and now it's retraced back to 26. So, I mean, the question is, how do you use the dollar Swiss to make any money right now? I would say I'd be cautious with it. I mean, there are those neutral strategies, but you got to make sure there's some premium in it. And unfortunately, a lot of the time, from when I have looked at it, there tends not to be enough premium to kind of set some type of a neutral kind of price action strategy on this one, on Nadex. It's just a reality, right? Not everything is perfect. There's been some small minor trades in here, but right now I don't see any levels that I love on it. So for me, dollar Swiss is probably going to be a pass this week. Now, dollar yen continues to rally. So yesterday for my group, I was like, listen, if we can get a break of 109.85, I'd be looking to go long. Again, the Harry Potter trade we talk about. Here's the push, there's the base, there's the pullback. It just didn't touch the level and then left without us. So it happens. It is what it is. On a 4 hour basis today, I was looking to get long that one. This is one of those ones. It's just continuing to drive. You can see, and this is a 4 hour basis. I'll drop it back down to an hourly so you can get an actual good picture. Here is all the news releases that can affect this pair, okay? You have the dollar in here, you have yen-based news in there. There's a lot, right, on an hourly basis coming up over the next, look at it, next couple days. The dollar yen has been quite hard to play, all right? I'll bring this up real quick to show you the dollar yen, right? And it's one we've been kind of chasing. We've talked about it before, right? We don't have any levels in this one. We had a small one here, and it was kind of like, can we snipe it, right? Yes, did I say? Hold on. This is kind of what the next the daily zone looks like. I know this is quite busy. We don't technically have another trade or another kind of decent selling level until 111.58. So I'll switch back to Trading View and let me put a line at that 111.58 so you can see where it is. 111. It's all the way up here. 111.58. Okay. So as far as the daily basis goes, we have all this room right now to the top side before we have another area where we have confirmed sellers that, basically the level meets all our parameters. Remember, and again, this is kind of a caveat to everybody, I am not a support and resistance trader. right? I am a supply and demand trader. It is different. If you don't know the difference, you can reach out to me and I can try to help explain it. Not every time you see a hiccup is it an area where I'm willing to get in. There are certain rules that you need to follow. Right now, according to my rules that I follow, I got nothing to slow us down until that level. So could we have a jump of 100 pips, 115 pips? Sure. Is there news that can move that? The unemployment number tomorrow, probably not. Non-farm, probably, right? A big speech or a big statement by Biden, sure, absolutely. But hey, shh, it's okay. Here, we made an agreement, and she's bailing on the agreement for me. Here you go. Here. She's making me bribe her with gummy bears. Actually, gummy worms. So for this one, again, is it the best opportunity? No, I think this one has the ability to go higher. I think it will continue to move higher. But do I have an entry that, for me, the risk versus reward makes sense? Not so much until we get up a bunch higher. So, do what you guys want with it. It's kind of one of those ones. Unfortunately, every trade is not going to be a setup. Let's go across and do the commodities. Let's look at gold. Now, gold is down 2.4%. I'm sorry, not gold, oil. Down 2.4% today. We've mentioned coming to these levels before. We talked about 61.75 to 62.24. We talked about that Monday morning in our YouTube session. We got super close yesterday. Got close, didn't hit it, and then it drops. And then we closed and we opened there today, and it has done nothing but push down. Now, this one starting at about 7 o'clock last night had really turned, and that was really where the entry was. Again, I know it doesn't work for everybody. It is on YouTube. It is live. It is only 15 minutes. Had you guys gotten into that one, this one has been a pretty decent mover to the downside, and it was a great level. I like this level a lot. We had what, a $2 move to the downside. Okay, you don't get $2 moves to downsides every single day. Okay, and the reason I'm telling you this one is this is a lot of movement. Okay, this is a lot of movement in a very short period of time on a non-news day. Okay. When we tend to see this, we tend not to have as much movement on the oil inventory report. Now, the last time we saw this was almost the same exact scenario. OPEC Plus came in the day before the oil inventory report, made some comments, and the price moved. Actually, the price was already moving, and they made some comments. Oil inventory report it didn't really move that much, and then they had their meeting the day after, and then they moved it again. Okay, remember, they have a stake in the price of oil, so it's interesting when they make comments. I think if we focus and use that level one more time, right? If we use the 76, and I'll move it over here, guys, just a little bit. 61.71 to 62.21, I think, is a level we need to look for small bases. And again, this is an hourly chart, so dial it down a bit more. But if we are able to break through 61.21, for some reason, if we break through, I don't have a profit target of an area where I'm willing to get short this one until we hit 63.15. Okay. Now, you will see this level here. This was a level that, again, it had been one prior entry, and then it Harry Pottered off and came and touched it again. So this is another level that I am also kind of watching out for. And in fact, there's two ways to play this one. Okay. We could actually take it from here, right, as an area to go long from. Whoops. Right there. Change it to green. Right. Again, area basing, very strong push out of it, and it started at the European session. This is the European session move, so we know it was big buyers coming in. If we get back down to this level again, bottom third, 59.64, European session, which would be, let's see, it would be kind of from where we are now till 3 o'clock, right there. If we can get to there, again, bottom third, European session. This is the last time we hit that one at a European session open. That's the response we had off of it. It did turn where it was supposed to off of a level back to the downside. With OPEC making all their comments today about, with all the comments today about how, we're going to lower demand, all this is an emotional response to what they had to say. Oil inventory report comes in, could lead us to a nice little bounce to the top side, right? If there's a surprise. And again, remember, this is pretty common. European session goes up, US session comes down. right? And then again, this was the rest of the day, and then today was just basically flat. It was just down and then kind of sideways. So 59.64, I think is a decent level. Keep that one on your radar for tomorrow's oil inventory report, and we will talk tomorrow before that one comes out. Gold. So gold, I was like, yeah, we want to see some basing. Like it to come down, I'd like it to base, and like it to go higher, and it literally just based. It did nothing. It's stuck. It's stuck. So really at this point right now, I would say, again, I'm going to keep this on my radar. I feel that tonight, I think that depending on how, in Biden's speech about infrastructure, when he rolls it all out, I expect it to be, like I said, peaches, cream, and roses. But at the same time, depending on how much he highlights where we're at recovery-wise and how much more he's going to spend, I think has the ability to affect gold. I don't know what his speech says. I don't know what he's going to mention. I know it's going to be, this is the biggest thing ever. It's the most money we've ever spent on infrastructure and all this, and we'll kind of see. The question is, if he starts highlighting how much it costs, I feel like that could give us the opportunity for Gold Hawks to step in, because it's like, oh, he's going to spend this much money. We're putting this much. This is the biggest package ever. People tend to think about inflation. All right. And again, inflation will lead this to a bounce. Okay, so it's a close level. We really want it to come down and then kind of spend the rest of its day here. If we can get down for some of the numbers tomorrow, we may, get some type of a bounce right now, or later. But right now, you can see that this is, again, even 30 minutes, it's pretty ugly, right? We've literally just kind of compressed ourselves into this little kind of pendant, right in there. So rather small, but I think 1674 is a decent level to take a bounce off of. It is a psychological level. Silver down here as well. So silver, if you attended Monday's session, we talked about there being a support and resistance trap as soon as it touched this level. It did give us one front run. Again, we had a very fast move and then a turnaround at that level. Well, here's where the trap was. As soon as we saw the trap, it went up about, 20, 30 cents. If you trade silver, that's a decent amount, actually. And yeah, for anybody that decided to play support and resistance and take this short, yeah, you probably got stopped out. And as soon as you sold it, it continued to push lower. But it's kind of in the same scenario that we had just with gold, right? Except this one is a little bit uglier. It's a lot of wicks back and forth, a lot of indecision, right? The opening closing price is the same with kind of a lot of whipsaw back and forth. I will say kind of on the 4 hour, you can see that we have a larger level here. And this is a level that we haven't been to for a while, but it's one of those levels that it really kind of, the very top of the level, we know we had a decent push out of it. But as far as where the bottom of that level is, this is quite a wide area, right? Buyers absolutely save this one from going anywhere. But the question is, heck, do we take the whole thing? And that's just a big level of risk. I mean, you're talking about going from 23.91 to 23, like a 40-cent stop. Nah, that's just not really the best way to do things. It's just way too much. So, I think what we need to do for silver is we need to wait till we get some type of a pop or some type of a retracement. We know there was a bit of a hiccup at 24.36. So I'm kind of looking in this area saying, all right, of course we don't have it there. Let me see. Looking for the decent pop, probably there, maybe there. I'm really looking for something in that area, some type of a basing in there as an area where we can have kind of a rally back to and then turn and flip to take advantage of this move. And again, this is a 45-minute chart. I was trying to see if I could get a decent level. Unfortunately, there's just so many wicks in silver right now. And remember, according to Reddit, silver is supposed to be at like, what, $100 by now? And it's not quite up at $100. So Reddit versus Wall Street, I think Wall Street is still winning this one right now with it being down at 24 bucks. But look for small plays. Again, 12 o'clock in the afternoon when we've had no movement back and forth is not great. Non-farm and non-farm payroll this week, or ADP non-farm and regular non-farm, both of them have the potential to really kind of crank this pair sideways and do some movement. But right now, I have to say I'd have to be, I'm continuing to be a bear in silver. And again, for the last couple of days, being a bear in gold and silver has been, quite fruitful. So that's what we have. All right, let's switch back over. So that's it for today. We kind of snuck that one in right at the 1 o'clock window there. Mark your calendars for next week, April 6th, from 12 p.m. Eastern to 1 p.m. Eastern. We'll be back on again. And for those of you that have not caught our morning broadcast, please do. There's been a lot of levels that have been really great levels. And again, a lot of educational opportunities, things that we've mentioned. The way to do that is just go to youtube.com, search Nadex, go to their page, hit subscribe, and hit the bell for notifications. And again, when we go live in the morning, you will see it. Sometimes with a countdown, sometimes not, depending on how much we're talking beforehand. But again, I hope you guys join us. That's it for today. If you have any questions about anything I mentioned, keeptradingsimple.com. Typically, if you have questions, the easiest way to get in touch with me is to just email me at support@keeptradingsimple.com. You can check us. I have a YouTube page as well, and I do broadcast. I try to do it every morning at 9:30. This week it'll be Wednesday and Thursday. I won't be streaming on Friday, but I will be on tomorrow and Thursday if you guys want to join me there. All right. You guys take care. Have a good trading day, and thank you again for joining us. I appreciate you guys coming out. Take care.